What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So what we're going to be covering in this update is a little bit of the Ortex data on both AMC and GME to kind of figure out, well, where we are at in terms of the short interest, utilization, cost to borrow, shares on loan with both of these stocks. Now, then we're going to get into some of the more important concepts that I really want to get across to you guys in this update. The first is that about $37 billion so far this year has essentially been stolen from retail investors in terms of their buying pressure in AMC. The off-exchange volume on AMC, the amount of orders that are getting routed off exchange is astronomical and is a very, very big problem in our market. And I'm going to show you guys exactly what these numbers say, what they said today, and some suggestions on how, if you don't want this to happen, what you can do to make sure your orders are getting routed to the lit exchange. The other thing that I want to briefly touch on in the later half of this video is I'm still seeing this conversation kind of trickling up around this buying puts on AMC conversation. Now, I know a lot of you guys are curious about this kind of new piece of due diligence that is kind of being circulated around, but I'm going to show you guys some math on what exactly does happen when a lot of puts start to come into the stock, even if everybody's plan is to put money back into the stock. A little hint, it's relatively impossible for people to make enough money on puts to counteract the delta hedging selling pressure that the market makers would put into the stock when they're selling a lot of these put options to retail investors. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And again, guys, we really want to show you guys what we have to offer you guys in our Discord with me, the Masked Investor, and Review Dork. So what we are doing for you guys is we are kind of offering you a little bit of a grace period where you can sign up through the Patreon, but you don't get charged until the end of the month, the beginning of next month. So if you do want to sign up, get access to all of the 20 private live streams every single month, 1348 crossover alerts on over 400 stocks, one-on-one training sessions. If you're interested in that and taking your trading seriously, make sure you check out that link down below in the description. So AMC closed the day today below 1973. That's not really what we wanted to see at all. We were down about 3.24%. The market was pretty volatile, but ended up finishing on a pretty high note. And in the after hours, we're down a couple more cents as well, about 13 cents. Again, guys, we're going to need to see that buying pressure come back into the stock in order for us to really see the price continue back up, obviously. So when we come over to the Ortex data over here, we're still showing that 100% utilization, which again is pretty much nonsense because we're not at all-time high shares on loan. We're at 139 million right now, as we can see over here. We have lower cost to borrow. We have 2.28% average. We have 2.94% max in 1.04% minimum. We're still at 20.94% estimated short interest, which is still very high. The shorts have not covered their position in any meaningful way. Now, let's talk a little bit about GameStop's Ortex data. So quickly, 181,000 net borrow of shares today, but we did see over here the cost to borrow max really skyrocket to 75.45%. Average cost to borrow, 8.48%, 1.04% minimum with 21.83% estimated short interest. Now, I want to go over some of these concepts with the off-exchange trading that is taking place on AMC. The main stem of this is payment for order flow. When your orders are getting routed through a payment for order flow broker, it's going to somebody like Citadel, like Virtue, to an internalizer or a wholesaler who is routing these orders, not actually at a lit exchange like the New York Stock Exchange, the NASDAQ, or IEX, but doing it in-house where they are taking the other side of the trade. When we come over to this website right here, Chart Exchange, we can see here that today's off-exchange and dark pool volume was 27 million, which is 52.78% of AMC's total volume. That is absolutely insane. Half of the orders are not going to the exchange. This limits price discovery, and when you limit price discovery, you're not really seeing all of that buying pressure really having an effect on the stock. Now, the other thing that we need to discuss here is, well, what's the total amount of money essentially that has been routed into these off-exchange venues this year so far? So we do have this infographic right here that I did see floating around today. The shares traded so far about 3.5 billion so far this year. Short volume about about 1.8 billion. Shares run off exchange, another about 1.8, 1.9 billion shares. Buying pressure stolen or off exchange, $37.9 billion we have not seen go directly to the exchange. That is a crazy amount of money that could have been really used to really show that retail investors or the market should have been pricing AMC higher because there was all of that buying pressure coming in. Now, when these market makers get these orders, let's just say they don't have enough liquidity right now to take the other side of the trade and fill these orders. They're going to dilute the share price with short exempt shares. That is not a good thing. That is decreasing or it's increasing the overall supply, and just based off of just normal supply and demand metrics, that's going to decrease the price of the stock. Now, I want to get into this put situation because I know a lot of people do find this interesting, but I want to make sure you guys fully understand what you're getting yourself into because if this really starts to happen, we're going to see a reverse gamma squeeze, and it's really going to hurt the price of the stock, which is not what I want to have happen. So the first thing that I want to show you guys is the options chain for AMC. When we come over to the options chain, we can see the $19.50 strike on the put side was up about 10% today, and AMC was down about 3.24%. Now, what's the cost of this contract right here? Well, it's about $54 for this specific contract. The delta on this is about 0.456. Now, the math on this is really simple, and I want to make sure you guys are fully getting this here. So the contract price, $54. When we come over to this Google Doc right here, this is what the put costs right here, $54. Now, the amount of shares that this contract is going to control, according to the closing price, you would just do 100 times whatever the closing price was, which was $19.73, as you can see right here, $1,973. Now, you see this number right here, $887 of selling pressure. Where does this come from? Well, in order for the market maker to adequately hedge the puts that they are selling to retail investors, when you sell a put, again, we've talked about this a lot, that sold put position has a positive delta, so you need a negative delta position to counteract this, meaning that they have to go out in the open market and short the stock unless they are selling enough offsetting call contracts to balance off the delta. Now, with the delta of about 0.456, that's essentially the amount of shares that they need to short, 45% of 100 shares, which gives you that $887 of selling pressure. Now, remember, the put costs $54, so you spent $54, and now there's $887 of selling pressure coming back into the stock. Now, let's just think about this right here. Some people, I've heard this a couple of times, are saying, well, I just want to make money, and then if I make money on AMC puts, I'll put it right back into the stock. Cool, great. Let's go over that scenario here. Now, with around 1,000% gain on that put contract, you would receive about $540 back. Well, you can see here that initial selling pressure, that $540, even if the contract goes up 1,000%, is not going to counteract that $887 of selling pressure. But what you don't realize is that selling pressure actually goes up as the stock continues to go down because the deltas of those contracts are not fixed, and the deltas will continue to go up, meaning that the market makers have to short more shares. Now, going off of that point too, remember we were talking about a little bit before those short exempt shares? If the market maker cannot get their hands on enough shares to take the other side of the trade, the same thing happens when they are hedging these put contracts. If there's not enough shares for them to adequately hedge, they're just going to short exempt and dilute the price even more. So when the price goes down, delta goes up. So let's say now that out of those 100 shares, with an increase in delta and accounting for the decrease in stock price, they would be hedging now about 0.7 of the value of those initial shares. So the delta across the board would be about 0.7, meaning that $1,381 in total selling pressure would come in from just that $54 put contract. That is absolutely insane. That is how options are moving prices. Every single time you see a giant price movement to the upside, a lot of the time, or every time, it's the result of a lot of calls being in the money. If you were on the stream today, we were talking about that stair step analogy to the upside, where you take your step on the first stair, and then the next stair gets built, and basically the equivalent of that is more options coming in closer to the money. You step up on that stair, more stairs start to get formed, and then you keep climbing up in price. So you need that gamma ramp, and the ramp there is that stair step up. But in this situation right here, well, you got to buy $540 worth of more shares, but the total selling pressure was 1,381 approximately. So as this happens, you're going to start to see a lot of selling pressure come into the stock. Even if people make money on the puts, the amount of selling pressure is going to drastically outweigh the amount of money that's going to come back into the stock. So hopefully that all made sense to everybody. And that is mainly going to wrap up this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I'll see you guys in the next video.